Hey guys, Mike here. So an important thing we're going to talk about today that you don't want to miss is, we got the big mega cap tech stock earnings coming up, right, for the second quarter earnings to be reported. And there's headwinds that we didn't really have going on during the first quarter that we have going on this quarter. And when I say headwinds, not just here in the United States, but more importantly, what's going on a global scale. Because these companies, I'm going to tell you, you'll be surprised, at least I was a little bit, what percentage of the revenues come from outside the United States. Remember, we're the biggest economy, right? China's number 2. But you'll be shocked how much their revenues come from outside the United States. And I'm going to tell you that. But also, more importantly, it's important to understand these headwinds they're facing. They really haven't faced them probably since maybe, I think it's 2015. One of the headwinds, the other one they really have just never faced, honestly, since they've been in existence. And so, we're going to cover both that. The first thing we're going to start with, though, is what's going on globally that's going to affect these companies and their earnings. And the first one's just inflation around the world, right? I mean, you got some don't have a huge amount of inflation, but everybody's fighting increased inflation around the world. And so that's number one. Number two, energy costs. You think we got it bad here in the US? If these numbers are even close to being right, and if you're in Europe watching this, let us know. But I thought this was meme stock charts when I first saw them. They're just going straight up. And supposedly, I've never been to some of these countries, but supposedly somebody was telling me who has, is that it gets really cold in some of these countries, and they hadn't seen that coldness yet, but when they do, they're really worried about energy costs at this point in time. And then you look at what's going on in like Sri Lanka, for example. This happened this weekend. Their economy collapsed, and so they're storming into the presidential palace or whatever they call it. So their president's going to step down now. And then this is the one you hadn't seen since 2015. I found this right here, this article. This is from 2015. It talks about how the strong dollar is really going to hurt companies' earnings. And, you might be thinking, well, why would it do that? Well, understand if you have a lot of revenue from outside the U.S., you have to convert that to U.S. dollars. And it goes right here and says Apple, for example, was forced to shut down its online store in Russia in December to review pricing, blaming extreme fluctuations in the ruble, right? And plus we had a really strong dollar going on. And I'll show you that right now. As you can see, this is 2015. And this ought to look eerily familiar. Look where it went up to. Got up to almost 100. Actually did get past 100 there. Well, if we scroll over, what do you see going on right now? You see, same, it almost looks identical, right? Just skyrocketing up. Now we're at around, I think it's like 107 or somewhere in there. And so if you look at what happened to Apple in 2015, and you understand why this happened, basically it just traded flat. When it started off strong, and then just ended up basically around, 3% for the year. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And so what is Apple currently doing around the world right now to try to offset this? They are increasing the prices of their devices right now to try to, I don't know if they'll be able to offset all of it, but at least some of it. And we'll have to see, though, because they got to be careful, and they're really trying to make sure they're careful on this. Because why? Because the other countries got it way worse than we do, just because they're paying way more when it comes to energy and things like that. And so that's something. And plus, I don't think, correct me if I'm wrong, I don't know this, I'm asking anybody watching this from Canada and Europe and stuff, I don't know if they got a bunch of stimulus checks. I have no idea, right? And so if they got as much as we got, I don't know. And so maybe they don't have that kind of money sitting in the savings account like supposedly we do, which I'm doing another video on that anyway. But the reason why this affects Apple more than anybody else, and I'll be honest with you, I did not know this, is because 67% of Apple's revenue is generated outside the United States, and that is massive. And then if you look at Alphabet, which is Google, almost 55% of the revenue is generated outside of the US. You go to Microsoft, over 50% is generated outside the US. Then you go to Tesla, and it's almost 55% generated outside the U.S. And then last but not least, you got Amazon, which is actually better off than anybody else. Only about 30 to 35% of their revenue is outside the U.S., but they have a whole nother headwind, guys. This, I think, was by Morgan Stanley, the projections for 2022 on diesel fuel costs, because Amazon is the only one in the group. They have to deliver their goods, right, on their e-commerce. Well, look at the number they had generated for 2022, $3.96. Next year was $4.19. Well, look where we're at right now. Between $5 and what's the cheapest there? 40 cents up to almost $7 in California. And so what has Amazon done to try to offset that? Well, they increased the Amazon Prime membership. They also, what it was, some kind of inflation tax or something they put on the people selling on the platform, which in turn, of course, those people most likely increase their prices as well. And you can see this snowball effect, right? Because if these companies who are huge, if they're out there increasing their prices, not just here, but around the globe, still increasing prices, does that help inflation or does it actually hurt inflation, right? Answer's pretty easy. It hurts it. It makes it harder to bring it down. And that's what I'm telling you. That's why I'll be glad when we do peak. But people got this idea we're going to peak and it's going to be like this straight, just meteorite down. That is not going to happen. That is no way in the world that happens. Okay. Because I'll get into this a little more, but think about rents, think about mortgages, think about food costs, think about energy costs. Those aren't going to go down anytime soon. Okay. Then you got companies still out there, not just these companies, all the companies trying to increase prices to offset all of these other headwinds they're facing, because it's either a choice of let's decrease our margins, which you don't want to do. They don't want to do that. All right. Or raise prices to offset all these costs if the best we can to try to keep our margins where they're at, because Wall Street really gets upset when our margins get compressed. Okay. And so, that's where we're at on that. So I know a lot of these companies either have already done stock splits or going to do stock splits. Google's is coming up this month, I believe. Tesla, I'm not sure I'm pretty sure they haven't set a date yet to do another stock split. And so it's something to think about. And that's why I say these earnings are some of those interesting earnings I've ever seen, right? The first quarter for different reasons, this quarter for totally different reasons, right? All these headwinds that we really haven't seen. And the question is, did they increase their prices enough? And were we willing to pay those prices to keep those sales up to offset these things, right? So they'll not only meet earnings expectations, but at least hold guidance. Remember, Apple, if I'm not mistaken, remember correctly, they pulled their guidance. They don't even have guidance for the rest of the year. We have no idea where they're going. That's why people are really surprised they've held up as well as they have, because there's no guidance on the table anymore. It's crazy, right? And so this is big because, again, if they hit it, if Apple brings back their guidance for the rest of the year because they can kind of get a better hand on it, there's no reason these stocks won't go higher, because the market wants to go higher. You can feel it. I've been telling the members that like every day. You can just feel that those dang institutions want to drive this market higher, whether it deserves to go higher or not. They want to do it, and they're looking for any reason to do it. Okay, because the retail investors have pretty much been wiped off the map at this point in time. I mean, the majority of them, and a lot of them won't even come back at this point in time. But a lot of them are so far down, they don't have any more money to put in, right? Because there's no more stimulus checks coming out. That's what got a lot of people in. All that free money, they rolled it into the stock market. That's not there anymore, and it's been lost. That's gone. And so, that's what's going to make it interesting. Plus, a lot of retail investors don't get into big mega cap stocks, but now they've done stock splits or are going to do stock splits. You're probably going to see that. That's why they're doing the stock splits, trying to bring retail into them to make, because they're more affordable now, right? And so, but you've seen Amazon where it's kind of been wavering. Like that stock split hadn't done much of anything. We'll see what Google does. And so, yeah, that's kind of where we're at. I want to make sure you're aware of that, because if these stocks go down, the indexes are heading down with them. You can almost guarantee if these, some of those well-ran companies out there with more money than they know what to do with, if they can't manage the situation, you can almost guarantee the smaller companies sure can't, because they just don't have that kind of money or resources to combat this kind of stuff. And a lot of them don't have the experience to combat this kind of stuff like these companies do. And so that's where we're at. And also, that's another reason why, just as a side note, for those who operate within the United States more, like, for example, in airlines, who is it? Southwest, I think it is. LUV, I think it's a ticker. They operate mostly domestically, so they don't have to worry about converting anything into U.S. dollars. All the stuff going on in those other countries doesn't affect them. It's all really about what's here in the U.S. So you have companies, especially small cap stocks, that just operate right here in this country, right? So that's all they got to deal with. And so we don't have to worry about any of those things. So in a way, they kind of got an advantage. So that's why you could see small caps also move up, because they've just been obliterated at this point in time. And so, again, those are the ones that usually recover the fastest. Just depends on this week with CPI, PPI, retail sales, and earnings, okay? A lot of stuff. So just putting that out there to you. Let me know in the comments if you got any questions or just concerns, whatever. And so if you got anything out of it, hit the like and subscribe button, guys, and I'll see you tomorrow.